very insightful discussion right there. Once again, for everyone that just joined in the back right here, welcome to the Asia Clean Energy Summit 2025. It's been a long day, but hopefully you've gained a lot more new insight in this very, very fascinating subject right here. Now we're moving on to our next panel, Charting the Path Forward, Investment and Innovation for Connected Energy Futures. And now it gives me great pleasure to invite on stage Mr. Roberto Lorato from MedcoEnergi. Next, we have Dr. Nor Azlan Bin Mostafa from Single Buyer. Also, we have now Mr. Ravi Balasubramanian from Temasek. Now we have also Mr. Nuri Doğan Karadeniz from Karpowership. And also we have Mr. Mitesh Patel, SunCable. And last but certainly not least, please help me welcome Mr. Mats Ronde, DNV. And of course, moderating the session is Mr. Ethan Zindler. We have you back from BloombergNEF. Take it away, Mr. Zindler.
Thanks so much, and hello everybody. Really interesting conversation before. I'm really glad to be with all of you today. Thanks for this opportunity. I'm with BloombergNEF. We're the energy market research division of Bloomberg, and we've been focusing on the energy transition for about 20 years. And I'm really pleased to be joined by an outstanding panel, a large panel, I would note. We have 40 minutes and 6 speakers, so I really want to make sure everybody gets a chance to say what they have to say. I'll offer one quick comment before we kick off, which is, I think we heard a lot of positive things today about the volumes of capital that are being deployed into the energy transition, over $2 trillion globally. We heard about the 500 gigawatts of renewables that were built last year. There's even signs that CO2 emissions might be starting to crest or even start to come down in China, which I think is a positive sign. But I think no credible organization who's looked at the issue around energy transition would say that any of this is moving fast enough. We obviously need to be deploying capital and building stuff much more quickly than all of that. And so I'm really pleased to have 6 panelists here with very different perspectives on all of these topics. And I welcome all of their thoughts on what we could be doing to be doing deployment and building faster to address the climate challenge overall. And I think I'm going to start, and there's multiple places I could, but I want to start with Mitesh first to talk about what SunCable is and the project and its ambition, and some thoughts about how it integrates with some of the energy needs in this region in particular.
Thank you. Good afternoon, and pleasure to be here on the panel. Those who are not familiar with SunCable, I'll just quickly introduce the project. We are developing a project to bring 1.75 gigawatt of solar plus battery storage from Australia to Singapore. That's quite a massive project. Why now, and why it is imperative that we develop this kind of long distance interconnectors? I think, very simply put, the humankind has been moving energies in large quantities from where it is found in abundance to where the demand centers are. We have been moving coal, gas, LNG for several decades. We haven't yet gone about moving electricity, primarily because it is difficult to store and move electricity. But if you look at the evolution in the technology, HVDC technology, cable technology, and the cost curves coming down for solar battery storage, it's about a time where you start looking at moving the energy in large quantities as electricity, in the form of electricity. The other aspect is that, particularly for Australia, there's plenty of land. It's among the top 5% of solar resources globally. That makes it very attractive location to harness the solar energy and dispatch it to Southeast Asia, which is about 30 to 40% less solar resource compared to Australia. On the demand side, if you look at the constraints in particularly Southeast Asia, the land is very limited. You have competing land uses, for example, urbanization, agriculture, mining. So besides the tropical climate where sun is not that great, you also have the challenges of land. The second element is there are 2 more catalysts. One is AI. There's going to be huge demand from AI. And as it is, Indonesia and Philippines are quite a big archipelago. If we start connecting all these regions, it does make sense to start investing in these long distance interconnectors. Finally, what I would add is that there's also benefits to the entire region, the broader benefits. It opens up a huge opportunity in cross-border electricity trade. We have been trading energy in different forms. Why not electricity? Job opportunities, the social benefits that comes along with it, the new investment that it will spur, and so on. So there is, for all different reasons, a big case to invest in long-distance interconnectors. I personally believe that in the next 15 years, probably long-distance interconnectors will be one of the new major asset class for infrastructure investors.
It's interesting, and we heard a fair amount about that on the last panel as well, and as a potential opportunity. But it is something which I think it's not in the immediate future. It's something more longer term. Is that right?
Well, you have to start somewhere, and I think this is a good starting point. Singapore has been a catalyst to kind of start this rolling. They are putting in huge amount of effort in bringing the ASEAN countries together to harmonize the regulation, the rules, and the way they can bring things together for the ASEAN power grid. So I believe the time is right now. It will obviously need more. We talked about in the previous panel discussion about long lead times for supply chain and so on. So these projects require massive capex, massive supply chain. So you start now, you can start delivering those projects in 5 to 10 years.
Mats, I'd love to bring you into the conversation because I think we've already started to get into the concept of the ASEAN power grid and an integrated system here, and obviously heard a good deal about this earlier in the day. Maybe bring us up to speed on where that stands and some of the challenges that still exist on actually trying to execute on this.
Okay, thanks very much. So first, I'll briefly introduce myself. So my name is Mitesh Ronde. I represent DNV. DNV is a global technical advisor and risk management company. We're active since about 160 years in the maritime space. And
Mats, I'm gonna interrupt and just ask if you speak up just a little louder. At least over here, I'm having trouble hearing you.
Okay, I'll try to speak up a bit more. Apologies. So I would say DNV has been active in the maritime space for about 160 years, and we've now already been active in the energy space for almost 100 years as well. When it comes to the ASEAN power grid, we're quite active within the region. So first of all, we act as the independent advisor for EMA in evaluating a lot of the electricity import bids coming into Singapore, both from a technical as well as from a techno-economic perspective. Additionally, we are also fortunate enough to work with ASEAN power grid partners such as ACE on projects related to grid code harmonization and integrated resource and resilience planning as part of the ASEAN Interconnector Master Plan Study, Part 3. So thanks very much, first of all, for the question. It's clear that there's a lot of developments happening in the ASEAN power grid. But of course, the ASEAN power grid has already been a subject of discussion for more than 30 years. And still to date, we have not actually made as much progress as we were hoping for. And as mentioned in the previous panel as well, this is not a technological problem. The technology exists, the technology is mature, the technology has already broadly been applied to other regions as well. So what's kind of preventing the ASEAN power grid from materializing in a major way? Unfortunately, there's not really a single silver bullet solution. But instead, we do see that there's a lot of small areas for improvement that I think will really help try to move the needle on the ASEAN power grid. The first of all is about the planning side of things. I think it was highlighted already in previous panels as well. But one of the key things is that in order for the ASEAN power grid to succeed, all the different member states within ASEAN need to be convinced of the benefits for them. Those benefits can, of course, be purely economical, but they can also be in terms of emission reductions, environmental improvements, or even social conditions like job creation. So I think one of the first things that needs to happen a lot more is to have much clearer planning, both in terms of economics, but also in terms of the technological side of things, to really highlight what the impacts and the benefits are of the ASEAN power grid. This is, of course, regularly done right now as part of the ASEAN Interconnector Master Plan Study. But what we do see still is that there's a bit of a disconnect between the individual countries and the planning that they do on a regular basis and the regional planning, where, first of all, the domestic plannings all take place at different times. They have different intervals between them. And we also see that once the regional exercise has been performed, there's very little feedback mechanism. We kind of see that a lot of the insights from the regional planning and the optimization are not taken into account by the individual member states. So therefore, it's not clear to them what the actual tangible benefits are to them. The second part is on the regulatory harmonization, and this was also briefly mentioned. If you want to develop an interconnector between two countries, it is complicated, but it's possible. You need to have agreements on the technical side of things. How do you design an interconnector? How do you operate it? What's your operating model, your revenue model? How do you serve your off-takers? However, when you start doing this for an entire region, where the entire region is interconnected, it becomes awfully much more complicated and much more time-consuming. So instead of waiting until you're starting to develop these interconnectors and being afraid of secondary impacts on your neighbors, we really need to be proactive and think already right now about, okay, can we provide a baseline for all of these regulations and harmonize them ahead of time so the process to develop these interconnectors becomes much more streamlined. Supply chains were also mentioned, I think, is a combination of technical supply chains, basically the long lead times for items, but also the permitting side of things. We see that permits can also cause delays of up to 5 to maybe even 10 years. So more streamlining in the permitting process is going to be required. And lastly, was also mentioned already, of course, financing. Historically, utilities have to pay for all of these network upgrades that are required with a payback time of about 30 years. But utilities simply do not have the right amount of capital available, and they cannot wait 30 years to earn back their investment. So access to a lot more additional capital, but also different financing, operating models, revenue models are going to be very essential in trying to move the needle and get that investment going.
Thanks for that. And actually, I'd love to bring in Dr. Nor Azlan here, because Mats, you talked about the need to have all stakeholders be supportive and engaged in this. And I guess I would turn to you, Dr. Nor Azlan, to get your thoughts about the stakeholders that you represent where you are. You obviously have you're looking at one particular region of one part of the region, and what your thoughts are about a larger grid that's more interconnected. But of course, I would first invite you to introduce yourself and explain what single buyer is so that everybody understands that.
Okay, single buyer, we are single buyer for Peninsula Malaysia. So we buy electricity from the IPPs and we push it to the grid. Since we are the only entity that buys from the IPPs, we call it single buyer. I think moving forward, the government of Malaysia is looking at possibly having a market. So then the single buyer model will not be applicable. But as of now, it's a single buyer model, and we are the entity that buys the electricity. At the same time, we also do the planning for the Peninsula Malaysia supply, for long term. We do it for 20 to 30 years. The government has planned for net zero by 2050. So we are the planners that put in which type of technology that we need to put into the system. And one of the technology, or one of the source of energy is interconnection. Believe it or not, we put in, as part of our plan, interconnection from Thailand, from Vietnam, from Sumatra, and also from Sarawak. So it is in our interest also to have these interconnection projects to be available and successful. Because if not, we will need to do another planning and find alternatives to supply this energy. So for planners as well, we look at cross-border trading between Malaysia and Singapore. We have done that. We are also part of the LTMS, the ASEAN initiative, where energy from Laos, hydro-based, is wheeled through Thailand, Malaysia, and then to Singapore as well. So when you're talking about stakeholders, those are the stakeholders within the ASEAN. And having those kind of initiative, we learn a lot. We learn how to integrate between the different countries. You have different regulatory scheme by each country. And for example, in Singapore, you have a market, but you're buying from Laos, for example. So how do you sell to a market in Sarawak? So that's where you can learn. And although the idea of trading, having renewable energy from one place in ASEAN to another place is very promising, but in the end, the cost is also very important. Because for example, in Singapore, their USEP, the Uniform Singapore Energy Price, is quite low. If you convert to Malaysia, it's like 40 cents. So by the time the energy from Laos reach Singapore, is more expensive than that. So then you have to wait for the market to be at a higher price for it to trade. So the mechanism is there, the technical pathway is there, but in the end, the economic plays a part. But I think in terms of stakeholders engagement, stakeholders interrelation, I think within ASEAN we are working quite closely and smoothly.
Thanks. Roberto, I'd love to bring you into the conversation. First, any thoughts you might want to offer on the interconnected ASEAN grid, but then more broadly about the work that Medco does, even beyond this region overall.
Well, thank you for that, Ethan. Well, MedcoEnergi, of course, is not IOC, is not a multilateral, multinational institution. It's a medium-sized company which has grown quite substantially over the last 10 years, expanding 3 key pillars businesses. We identified early on that to meet, in response to ever-increasing demand for energy in this region for both fossils and fuel and renewables, we will need to adjust our portfolio. So from a typically oil and gas company, we started focusing on expanding, yes, oil and gas, maybe gas more than oil. We started investing in power, and we are one of the large power generating companies in Indonesia. And we also invested substantially in mining. Mining copper. So one of the critical elements to support the future or the ongoing electrification of the economy. So this is at the high level of the strategy and the portfolio, how we are designed around the strategy. The second level, if you wish, is sustainability. So when it comes to sustainability, having fully understood and realized the challenge and the urgency to address the climate change threats. On the oil and gas, of course, we're taking a number of initiatives to reduce emissions, but we have especially moved and invested more in gas. Today, our gas production is 70% of the total. In power, yes, we started as a gas IPP, but over the past few years, we've invested in geothermal and solar. We just completed one geothermal project and one solar project in Bali a few months back. Third then is, for example, we also initiated studies on CCS. So we identified the large potential for storage of CO2 in the Natuna basins, in the licenses where we operate. Now, connectivity. What is our contribution to the connectivity to develop of our regional energy system? Well, again, gas, first of all, we are one of the large exporter of gas to Singapore, which helps keeping lights and ACs running, but also doing with the fuel, which out of the fossil fuel is the cleanest, so helping the area to maintain a compatible carbon footprint for now. But the other one, which is probably more relevant today, to today's discussion, is starting this consortium for establishing a large solar power farm in an island not far off from Singapore, right, in Bulan, only 40 kilometers away from Singapore. We have obtained through the consortium the conditional license to import into Singapore 600 megawatt AC. But then again, you look at how you structure, how you build these sort of projects. So first of all, what are the key elements? Okay, we have identified the land for the solar farm. We have identified the location, which is very close, relatively close to Singapore. So only 30 kilometers cable won't be a big technical challenge to meet. One of our partners is also a large power generation in Singapore. So we also have through that, so the third element, the connection into the power system in Singapore. So this is about the partnership, right? The one who owns the land has been secured, is sufficient to install all of the panels. We have the partner who will help us marketing the green electrons into the Singapore system. And what we bring as MedcoEnergi, of course, is our experience in executing projects, and operating power plants. So the partnership, I think, is quite, I would almost say, ideal. Now, what else do we need to make a real project happen now? Well, we need to find win-win solutions that satisfy both the importing country, Singapore, and the exporting country, Indonesia. So, of course, Singapore wants cleaner energy, and Singapore is prepared to pay a premium that today, for example, Indonesia domestic market will not be able. Okay, first element that works. But also, Indonesia is something. Indonesia is not going to be happy with simply exporting resources, not anymore. That's not the philosophy, the economic philosophy of Indonesia anymore. In exporting the resources, they also want to see that these projects create upstream opportunities for employment, capabilities development, and especially investments to produce, to manufacture in Indonesia, and the key elements that are going to support this project, mainly solar powers and, for example, batteries. So in order to bring all of this together, we, together with other consortium, we've been able to identify and attract some large companies that already operate in the PV manufacturing and in the battery. And so there is an ecosystem that I started developing to prove that this sort of projects is not just about installing and moving electrons from Indonesia to Singapore, but actually having an effect, a multiplier effect in terms of economy, social development, and the like. However, we are still talking about two different countries who operate under very different philosophies, let's say. Just one small example. In Indonesia, when we develop a power plant, we sell our electrons on the basis of PPAs, which are long-term offtake, guaranteed by PLN, the monopolist in Indonesia. Well, that's not the way Singapore works, right? The market in Singapore is mainly a retail market based on competition. And it might be a little bit more difficult securing those long-term offtakes at a stable price that will guarantee the economics and especially the financing of the project. So again, and that's where when you really realize the complexities of putting all those things together. Sure. So technically, it's feasible. It's not like sending, a missile to the moon. By getting the right partnership, we got it. Now is getting the institutions and the countries to be aligned on the purpose. And I think we're making good progress. I think even also Minister Tan Sri Ling yesterday mentioned the MOUs that were signed just a few months back in June between the two countries to address, in fact, cross-border electricity trade, carbon capture and storage, possibly cross-border, and sustainable industrial zone, because this is what Indonesia needs to see developing as part of these projects.
So it sounds like the challenge, of course, is not just about sort of technical interconnection. It's about making sure that everybody's interests are aligned and served, even though people don't always start from the same place on some of these questions overall. I'd love to come back to you a little bit later, only because the sheer sort of the varied nature of the portfolio of different technologies and plays that you've made within energy transition are super interesting. But I do want to move on and bring Nuri into the conversation, because as we think about energy demands and sort of really immediate energy demand, I'd love for you to talk a little bit about Karpowership and the work that you do and the ways that you go to address that kind of immediate demand for energy that often emerges in certain markets.
Yeah, thank you. I mean, we are operational in more than 23 countries all over the world and in 4 continents. And during the last 20 years, we've been feeding a couple of country grids. Actually, and the week before, I was attending this ASEAN Energy Grid conference in Kuala Lumpur. It was amazing, though. But I think we need to capture the most important challenge of this, let's say, multi-continent or multi-countries interconnections. It's very imperative not to forget the renewables as the ultimate target which the humankind should achieve and must achieve and will achieve. But there's a time factor. And there's a fuel quality factor. Considering that for ASEAN interconnectivity, certain criteria need to be met, like smart grids, I mean construction of smart grids and substations, which really takes time, and you need to finance this all, and it's a huge project. And on top of this, there must be a surplus of electricity to deal in between these countries, not coming to the quality of the fuel or the quality of the production. I'm just talking quantitatively. Still regarding the subject quantitatively, we are just hitting to the fact that during the next 5 years, about 600 gigawatts of new additional energy must be pumped into the system of the globe. That's super challenging. Combining all the manufacturing capacities of all the generators, coal, I mean, gas, renewables, you add up to 200 or 250 gigawatts during the same period. The urban demand, the industrial demand, and the digital demand, which is coming in steroids. It's so hard to comply with the requirements of this coming additional demand. I don't claim that we should forget about the quality of the electricity to be produced. Yes, the ultimate target, the ultimate dream is renewables, 100% renewable. But I think the region with huge dynamics, I mean, you guys on this part of the world are growing super fast. Maybe much more than you anticipated. The reserve capacities in each of the countries, I mean, we are now working, at least studying in 17 countries in Asia-Pacific region. In all of them, the reserve capacities are shrinking tremendously. And there's another fight against the coal power plants, which I find okay. You need to, because I mean, ultimately the gas, everything must evaporate and just give the scene to the renewable energies. But please do not forget that there is no more turbine capacity on the world left for the next 5 years, all gone. No gas engine capacity, all gone. And for all the renewables to be functional, you need smart grids, as I said, and then connectivity and everything. Okay, it will come, but kilowatt hours produced by these renewables are aggregated 1/3, 1/4 compared to thermic capacities. So you need to build much more muscles, okay, install capacities. And second, you don't have much storage capacities, which is too much relevant. So you need to also produce storage capacities. So there's an interim period until 2035, if not later, where all these systems, all these grids need to be fed by some sort of energy, okay, additional energy. What my company is doing, I mean, we started the journey like 27 years ago. We are building floating power plants, starting from 50 up to 500, 600 megawatts installations per unit. We can be up and running in less than 90 days anywhere on the world, driven with gas. And whenever there is no gas, because one of the biggest hurdles is finding FSRU capabilities, I mean, regeneration capacity is very shrinking. So we are also building our own FSRUs to just run tandem with our power ships. So in less than 90 days, we can be plug and play wise, being alive up to thousands megawatts of capacities driven by gas. And I think by keeping the contracts short term, like starting from a year going 10 years or 5 years, according to the needs of the off-takers, this is a good way how to cover the gap. Actually, we are providing time. We are providing time to the systems. We are providing time to the utilities, to the countries, to just complete their own long-term investments. And we already have bought assets worth of 22 gigawatts. So we have some muscles in our company. We are now started building in USA, Texas, and some other parts of the world, including Singapore. But renewable is super good. Having all these integrated systems is very good. The total demand, global demand, will be 500 to 600 gigawatts for the next 5 to 6 years. And the total production, technical production capacity is limited to 250 gigawatts. So these are the basic standards, basic facts and figures. So now we need to know how to play these cards.
Thank you. And I knew this was going to be a tight panel, so I can't believe we're already saying this, but I want to bring Ravi in for at least several minutes to talk about the financial aspect of this, because I think we have an interesting group of practitioners here. You know, we see the volumes of capital are certainly high towards energy transition technologies, but then there's this greater level of penetration, and we might be in this sort of messy middle situation where we need other types of balancing technologies to offset some of the issues that are raised by high levels of renewable penetration. I guess just from a global perspective, you know, how much as you think about deploying capital in the energy sector, how much of it these days is on conventional deployable technologies, and how much are you looking to the future, to new technologies?
Yeah. A very good question, and it's great to be back here at CU as well. And you know, I can build on what some of my fellow panelists, and indeed the panel before me also, or panel before us, covered. Look, from an investment standpoint, Temasek obviously being a 400 billion plus Singapore dollar portfolio, we do have a presence in a number of regions, number of areas, different challenges in different regions. And by definition, we look to build a resilient, forward-looking portfolio. So one, obviously, a good part of our capital will go into things, scaling things that work today, because you know we need to be a responsible steward of our capital. But to unlock a lot of the things we've discussed today, like renewables, even there, where the technology is proven, it's often the lowest cost solution anywhere in the world. Why is it not scaling fast enough in some cases? In a lot of cases, it's because, you know, we, for example, in a couple of situations to make it more real, there were listed companies which wanted to have big growth plans in renewables. But as interest rates went up, their shareholders said, we want dividends, or, you know, you can't dilute equity and raise capital. So we actually took the chance to privatize some of these companies along with other partners, so we could actually ramp up the execution of these companies. And this we've done here, a big portfolio in the US, a big one in Europe. In India, actually, we started a platform from scratch along with EQT to, you know, really build on that renewables theme. So in different ways, so we actually have, I would say, leading renewables. And in some cases, even as we've developed these platforms, we've seen challenges emerge. You've had negative prices happen in many places of the world in the last, especially in markets where renewable penetration hits a certain level. Then you go to pivot and say, okay, I'm going to work on a contracted basis where you don't just rely on being on a merchant basis on the grid. You skip to other things like you're saying, okay, corporate PPAs. The hyperscalers, for example, now give you long-term PPAs. you go with that. Equally, you say, okay, a good part of my capex will be in storage, because that way you can capitalize on negative hours, buy more power when, let's say, the prices are low, and then selling them when the prices are a bit higher. That way you also help to stabilize the grid aside of making a good return. So even in these renewable platforms where we are deploying a lot of capital, we have to be creative and constantly innovating. So that's a good part of where we go with our core plus infrastructure, and it plays well, obviously. Like I said, hyperscale AI acts as a good anchor for demand. And notwithstanding whatever challenges you see globally, we still think a lot of leading corporates around the world, wherever they operate, still want, are committed to their net zero goals and are willing to pay. Again, we don't think it's a green premium, but just a long-term price for clean, reliable power. And we think, again, larger platforms that can combine solar, wind, storage, on-market procurement. It's no longer just about doing plain vanilla solutions. It's about bringing all of these together, which we believe, where we do these large partnerships and invest in large platforms, we can differentiate ourselves, and be a value-adding partner. The second thing, I'll come to your question on other technologies. Look, again, depending on, we have different groups in Temasek that look at, different parts of the value chain. But I would say we are invested in all of the above with our capital. Probably the amount of capital we deploy depends on the level of maturity of the technology, and we scale over time. This is not a spray and pray approach. It's about getting an initial position, understanding the technology, working with our portfolio companies to see where we can use it. Things like geothermal, we have an investment there. We'll probably scale it over time depending on how it picks up. Nuclear, we are invested in Fission, which is Westinghouse, which is one of the largest fuel and service providers for nuclear plants around US and Europe, increasingly in other parts of the world as well. But we are also an investor in nuclear fusion with Commonwealth Fusion, as an example. Hydrogen, I know that's been a bit slow, but there too we've invested selectively in a few technology plays. And we are seeing movement in some areas like maybe electrolyzers in select cases, or in a company called Amoji that we invested that focuses on ammonia applications. So again, over time, we will scale our investments in these as these technologies, if you may, become more mainstream. And maybe just on the last part where I'll talk about, it's one thing to do the, if you may, easier things. None of these things are easy. But we also set up financing partnerships, and partnerships is a key part, whether in equity or in debt, because we can't do these things alone. And we have created partnerships. For example, we have created a couple of partnerships that unlock capital for marginal projects. We've created a partnership, for example, with Brookfield, which is more on the equity side, on the which is the world's largest transition fund. We have created, for example, even with HSBC, a financing partnership that looks at marginally bankable projects in this region. And then with Clifford Capital, we have a platform that started off doing oil and gas, but now is looking at infrastructure projects around the region and indeed globally. So again, and then we've also tried to create, again, along partnering with universities here and one of our partners, Breakthrough Ventures, capabilities with local universities, NUS, NTU, in areas like, I would say, climate tech, hydrogen, all of these. So again, we are also trying to develop these other things beyond doing our bread and butter, which is investments, and also ensuring our portfolio companies like Keppel, Semcorp are future ready and are looking at these technologies. So I would say it's an all of the above and touches on themes a lot of the gentlemen have said, and also doing the harder areas and applying maybe not some capital, but also a lot of effort. And hopefully over time, I think, as the previous panelists pointed out, and I think when Mitesh pointed out with things like SunCable, some of the harder projects over time, we look forward to these becoming more scalable. But in the interim, building these capabilities, you can't react to these, as and when they come there. You have to play your role as well in them trying to get there in a mature and, I would say, responsible manner. So that probably summarizes, and I'm happy to touch on any of these. I know we're on time, but I'll probably just stop there.
That's a super helpful kind of lay of the land, frankly, of sort of, it sounds like you're heavier on the commercial technologies, but still involved, but in a lighter way on the future technologies, because those are obviously higher risk and you want to have that opportunity there. Well, as I said, I knew we were going to have not a whole lot of time for interplay, so I want to please join me in thanking me for this terrific panel, which I think we covered a tremendous amount of ground. I don't know if we solved all the problems of climate change and energy transition, but we certainly discussed them. So thank you very much for joining me.
Thank you once again to our distinguished guests. Can I get you all to gather in the center of the stage for a group photo together first? We can mark this occasion right here. Definitely charting the path forward, investing and connecting for energy futures. You want to photobomb that? Great, thank you so much.